My friends, what is going on? It is Tuesday, so once again, always trying to get videos out for you guys on Tuesdays and Thursdays, just kind of on overall view of the market. Today's video we're going to keep relatively short because obviously we have a big day tomorrow with the FOMC meeting. Basically going to be announcing the interest rate hikes, and then we're going to get some forward-looking statements from Powell. I'll kind of go over my thoughts here in just a second for that. Before we start the video, you guys know the deal. Nothing I'm giving you is financial advice. Everything is for entertainment and educational purposes only. I just want you to make awesome decisions for yourself, your family, and your portfolio. Please follow me on Twitter, Colin_Gladman. Easiest way to see a bunch of different chart ideas throughout the day, and even after hours. If I think I see a decent looking setup, I'll tweet about it. Also, too, I'll have my Discord link in the comment section, or not in the comment section, in the description of the video. Please feel free to join it. Also, too, on my Twitter feed, on my pinned tweet, basically just kind of goes over everything that you're going to get with the Discord. As soon as this video is over, I'm actually going to jump into a live chat with them to kind of go over tomorrow. But having said that, let's kind of look at the chart. So obviously, here's where we're at when it comes to SPY. This is a setup everybody's been looking at. We've finally broken the big bear trend. So in today's, kind of yesterday, we got a pushback down and closed below. Being as honest as I can, I was a little bearish heading into today. I thought we were going to get some continuation of pull down, people taking profits, just kind of getting out of the way of the Fed meeting. And, pretty much futures just had a complete reversal during the evening. So let's go over here. Let's look at futures right now. So if we're looking at futures, and let me see here. Let me actually get out of this real quick so I can. But basically last night, futures were just absolutely bleeding. I posted about this rising wedge, and then kind of went into a bear flag, and then you got the dump. And so kind of when I was going to bed, futures were bleeding hard, and then just in the middle of the night reversed and pretty much just ran all day today. So no, I'm sorry, this is where it was. Yeah, sorry, those patterns looked awfully similar. So yeah, this was the rising wedge that I tweeted out. And then we kind of went into this bear flag. Then you actually did have a big push up, but then followed by a big push down, and then right around in here. And you can see where it bounced is actually, back out a little bit further. So you can see where it bounced was right on the 618. Okay, very common retracement. And then that's the 618. So it's the inverse 618 of essentially this whole move right here, where from the August high to the October low. So this is kind of the range that I've been paying attention to the most. And you can see on futures that this 707, pretty much 4086, has been a real sticking point here lately. And it was also back here. It's kind of the top in December before pulling. And then you had the day where it really overshot, but then once again pulled back afterwards. So you really want to see this level clear to continue bullish continuation at that point in time. But overall, things do look good. Like if I'm looking at it purely from a bullish perspective, looking at this chart right here, like I said, things look good at this point in time. This was a strong candle, caught your 9 EMA, the volume. So you got a widespread candle, pretty much just a solid block. And when I say widespread, that just basically means, it's a big candle essentially. So, and you got it on increasing volume. So kind of the volume to me matches up with the candle. Things look good. But, obviously we've got, like I said, we've got Powell tomorrow. We've got the interest rates. My personal opinion, I'll officially go on record right here, is I think we're going to get a 25-point hike. And I think that's going to cause the market to pump when that is announced. And then I think we're going to get a little bit more hawkish Fed with not talking about pauses or continued hikes. I think they're going to talk about continued hikes. I think they're not going to commit to pauses, and then I think that's going to cause the market to pull back. And I wouldn't be surprised, like everybody's kind of feeling a little apocalyptic about tomorrow, whether it's the this monstrosity of a huge candle or a massive pullback, that this is just going to be a false breakout. And I'm a little bit where I kind of think it might create some more choppiness and some uncertainty. So I wouldn't be surprised at all to see a pump going into CPI and when the interest rates are announced, and then a pullback afterwards. I've got several videos in my Discord about basically how to trade these type of meetings. So it's going to be crazy. And then, of course, you've got Apple and Google and Amazon earnings after the bell, then on Thursday. So overall, like I said, that's what I'm going to be looking for. You've got to, I've talked about this many times before, but you really got to clear for me about that 413 level. And, what I would love to see is from a bull standpoint, you would want to see some big candles that take you over that 413, and then probably like a low volume retest. So basically, you would get a continued pump and then a retest here, and then continuation out of here. And the whole time you would want to see the volume increasing with the move, then decreasing on the push, and then a volume increase to continue back up. So big time going to be watching the volume to make sure I feel like the volume matches the move. Like I said, right now, until we clear this area, there is a real potential to essentially, make this look like one large double top before another push down. So I personally am very 50-50. I was telling my Discord that, the chart looks great, but the economy doesn't, as far as I'm concerned. So I'm just... That keeps me torn. Like I said, if I was just looking at the chart, I would say, hey, this is looking relatively bullish here. Which at the end of the day, that's what I trade. I'm going to trade the chart, not my feelings. Like I said, very strong recovery today, catching the 9. You're also, you're on top of all the important EMAs. You're on top of the 200, and you're also on EMA and SMA. So. I haven't really checked. RSI still got plenty of room to run, so just kind of looking over everything here. You got your MACD crossed over, so there's just not a lot of reasons other than what's Powell going to say tomorrow to potentially tank the market. So, but we got to clear this area before I'm really ready to be. If Powell gives us good news. If they only do a 25-point hike tomorrow, and they pretty much talk about pausing hikes going forward, then I haven't added commons in pretty much all last year. I haven't added commons like hardly at all. So I really can't even think. I've done a couple of small swings like on Netflix and things of that nature, but I'll actually start looking at adding commons for the long haul if things go really well tomorrow. But it's, like I said, chart looks great, but it's shaky as far as I'm concerned when it comes to, still room to run on the Bollinger Band. So like I said, as far as, I'm concerned, there's definitely room to run. But the pullback could be nasty too. So I'm really watching futures right now. Definitely gotta get over this 707 area. And like I said, because none of these bear market rallies have cleared that. Okay, I know I've done this exercise with you guys a couple times before, but just if you're new to the channel, here just barely got over the 707 before it was rejected. Didn't even hit the 786. And this one pretty much got to the 707. And I'm doing this quickly just so it doesn't take up too much of you guys' time. Right here. Once again, right here at the 707. So it is, right around 412 is pretty much my line in the sand where bears have to defend. They did jump in as of Friday, right at close, got smacked down, and then we saw the continuation on Monday. Like I said, I really thought we would see more continuation today, and we didn't. So, but Fed meeting is tomorrow at 2 o'clock, which is 1 o'clock my time. Last but not least, guys, going into tomorrow is a gamble if you're playing any type of options. Okay, that's just the reality of it. Things are going to move so quickly. So long as you approach it with a gambling mindset, please do not do full port calls or puts or anything along those lines. Please be smart. If you approach it, like I said, approach it like it is a gamble. And once again, I don't have any problem with a responsible gamble. But if you're being crazy with your portfolio, you're doing it all wrong. So today for me, the day went almost completely opposite of the way that I thought it was going to be. So I literally sat on the sidelines the entire day. I closed out in the morning the rest of the puts that I had on Disney, and then I just sat on the sidelines because it was like I'm not gonna try to force a trade when I feel like my read is off a little bit. So. Like I said, just be careful, be smart, and like I said, the Thursday update after we have our Fed meeting and after we get Apple and Google and Amazon earnings is going to tell us, I believe, a lot about the direction that we're going to be heading. Whether we've got any more leg downs or whether or not the bottom truly was in back here. One last thing, which is what I was going to show you, but if we do. If you do a fib from the COVID low to here, on the weekly chart, you pretty much hit the 0.5 exactly, and now you're pushing. So once again, this is super macro scale, but your next, real resistance. Looking at this, you wouldn't think you'd run into really anything. Obviously, like I said, you've got the 410 level, but then you got room up to about 417, 420 or so. So. If you were just looking at this like on just normally, be like, oh yeah, you got a perfectly normal retracement to the 0.5, and now you're going to start pushing up. Obviously, everybody is, the only thing that makes me, nervous about this is how obvious it is. But everybody's doing the inverse head and shoulders, so you'd want to look at breaking that neckline, probably a break and a retest, and then continue to move on up. So there's definitely a chance that the bottom is in. Anybody who's acting like it's not at this point in time is being a little bit too over biased as far as I'm concerned. Me personally, I am still holding to my conviction that we're going to see one more leg down. That would take us towards these pre-COVID highs around that 330 range, maybe even the 618 right around 320. But I'm okay if I'm wrong there too, because if Powell gives us good news, Apple, Amazon, and Google earnings are all good news, then like I said, I am going to start trading like I believe the bottom was found back here in October, and I'm okay if I miss that bottom. Once again, if you're thinking like a long-term investor, which is the way that you should think, and let's say, we got here before we start doing this, if I buy here and I missed here over this move, do you think I care? No. Okay, so don't always worry about timing tops or bottoms. That's a fool's game. I'm going to really start wheeling a whole bunch of stuff for passive income, get the portfolio rocking and rolling, because I just haven't done a whole lot of this. Sold a lot of covered calls on my existing positions over the past year, but if we get good news, it's time to rock and roll again, and that's the way I'm going to approach it. So like I said, 50-50, but my personal opinion, once again, officially, is we are going to get 25-point hike and then a more hawkish Powell. So we're going to get a pump followed by a dump and probably finish slightly red tomorrow. And then we'll kind of be, we'll be left at kind of a critical spot going into the earnings on Thursday. And if we do more, a 50-point to a 75-point hike and a hawkish Powell, and the market's gonna tumble at that point in time. And like I said, I just don't think that's the most likely. I would be surprised by a 25-point hike, a super dovish Powell, and talking of pausing rate hikes or anything like that. I would be surprised by that. So I gave you my most likely. Second will be followed up by, Powell's going to really, I think Powell's going to try to talk the markets down. He's talked several times about how, prolonged market runs, his number one goal is inflation, and, prolonged market runs, labor market not getting tight enough is only going to add problems to that. So, between the GDP numbers that just came out, the jobless claims, I mean, they keep missing the jobless claims over and over and over again. So, like I said, overall, I think Powell's going to try to walk the markets back, even if we get a pretty good interest rate hike. That's my personal opinion. Thank you for taking the time to watch this video. I'll see you guys on Thursday. Best of luck to you. Do what's best for yourself, your family, and your portfolio, and not anybody else on the internet or Twitter. Much love, my friends. I'll see you in the next video.